All right, thank you for tuning in. This is the Agency of Influence. Today, I wanted to review this article that I found. It's regarding Jim Cramer. You probably know him from, I think he's on CNBC. He does that stock show, buy, sell, buy, sell, buy, sell. I don't really myself have much of an opinion on him. I've heard mixed things. I've heard he does a great job saying what stocks to buy, what stocks to hold and sell, and all that stuff. But I found this one thing on him that it was pretty funny, so I can pull that up here. All right, so it's this article here that came out. It's about this guy. His name is Matthew Tuttle. He's apparently the CEO of his own company, Tuttle Capital Management, and he opened up this new ETF, which essentially is the exact opposite of what Jim Cramer says to buy. So whenever Jim Cramer says to buy, this new ETF that was just released shorts those stocks. And this guy here, Matthew Tuttle, has done the same thing for Kathy Wood's ARK fund. She has a couple of them, but this one was regarding the ARKK, which deals with it's a high risk, high reward type ETF. It deals largely in like technology, sort of like the Nasdaq. And yeah, so I think it's a funny idea in general. Because if you do not like Jim Cramer, you're probably gonna want to maybe consider buying the stock. Yeah, so I guess real quick with Jim Cramer, I found this one funny article about him, and he started this company maybe 30 years ago called The Street. I think he's no longer part of it as of a couple of years ago, but they pretty much just got into him saying, "Hey, this guy, he says he liked the Silicon Valley Bank, which is probably one of his like not hot calls he's ever made. This is the bank that went bankrupt. I think it was yesterday. They've been in the news pretty much every second of the day, and they're going to be in the news every second of the day for the next at least another week. Yeah, so apparently he's just in cleanup mode right now. Found this one video here, which I thought was kind of funny looking back. I mean, in hindsight, everything looks like you may possibly should have made better choices, and this is maybe one of those situations.
The ninth best performer year to date is SVB Financial, don't you want? This company's a merchant bank with a deposit base that Wall Street has been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, MoffettNathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second.
Wait a second.
Last year, they could come back. Yes,
They're going to come back. Sure.
Stocks the fourth quarter's performance 2022. I think the fears were not justified. It's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away.
They're not going away. Why would they?
Pools of capital has always been a very good business.
Always. Every single time.
You have to remember that a stock that falls 66%, like SVB Financial did last year, it takes
Better than 100.
to recover. After losing two-thirds of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40%.
All right, well, maybe like he says, it's going to go back to even, but the chances of that happening right now, I would not say are very likely. All right, so going back to this guy here, my man Matthew Tuttle. All right, so he was shorting stocks that Cathie Wood and ARK were investing in, and so I looked at each one for a comparison, and I rolled them back 1 year, and the ARKK is down for this year, negative 31.11%. Very bad. She kind of made a name for herself because she released these tech ETFs that did like 2x or something for like a couple years, like 100+% in earnings. but that was, that was in like the recent bull market we had, that huge run up. But now with this bear market, I mean, she's really not really earning her stripes here. But you look over to the SARC, the opposite, the one that shorts the ARK, it's down negative 25.29 for the year. So again, essentially negative 31 and negative 25%. So I mean, you don't have to choose Cathie Wood's ARK fund, but you also don't want to choose the exact opposite. It seems like this might be more of like just a meme kind of stock, where it's not really there to really give you good good benefits. You're not gonna buy your next Lamborghini with your earnings from this SARK. Now, since I said they're very tech heavy, they should resemble the NASDAQ somewhat. And they don't really. I mean, the NASDAQ is down essentially negative 5%, which is way better than, like, it's not even close. If you put your money into the NASDAQ, you would have lost money, of course, but I mean, it's a bear market. If you're playing the long game, you're fine. Just keep your money in there if you're able to. But yeah, it looks like Cathie Wood, nor is the Tuttle man, they're not really having a hot year. And as far as Jim Cramer, it looks like he's not really having the best year either. But in a way, who is? It's a bear market. We're in this post-COVID crash, and hopefully things pick up from here. All right, well, that's what I got for you guys today. Make sure you like and subscribe, and I will see you someday soon. Thanks for watching.